Hello traders, this is Martha Chiriboga with CapitalDynasty.com, hailing from sunny Florida. And tonight I am going to review my YM trade that happened on Monday, April 7th. I had a fantastic day, both on YM and CL. It was close to a $3,000 day. Fantastic. And I want you to know that you can do this too. It's very simple and systematic. Okay, so here, as you can see, pre-market hours, there's a lot of congestion going on, as you can see in the tight range here. And at the open, we had a strong bullish bar. And by the way, the pre-market analysis determined that the trend was generally down. So here, when this bullish bar, the first bullish bar that got printed, engulfed this red candle, I knew that there was going to be at least some temporary upward motion. So I decided to go long as soon as this first candle that got printed at 9:30 went higher. And so I actually did, and I got filled at 16,321. In the APA community, you don't really say the whole number. You just, on the YM, you just call out the last three numbers because we know that we're in the 1600 range. What we don't know are, what spectrum in that 1600 range. So that's why the traders would say, I entered long at, or entered short at 321 instead of saying the mouthful 16,321. Capiche? Capiche. Good. So I got in at 321, and within like 0 seconds I got T1. Oh wait, no, this is absolutely a little bit off. Oh, anyway, basically I'm not sure why it's showing 0 seconds right now. I think it's because it's not perfectly on the top of a candle. I think that's why. But anyway, I did get T1 at 10 ticks and T2 at 20 ticks. And then the market went against me, and it ultimately stopped me out 10 ticks below my entry, which was fine because I consider a stop loss a little point of reversal for my day. So immediately I read that, I knew that it was going down. We were already in a downtrend, so I wasn't surprised that this went from the 150 tick, as you can see, this right here, the 150 tick supply zone. It was going down towards the demand zones. Once I saw these three long candles engulf this bullish bar. At this point, I figured, oh gosh, I need to get in. So I actually did get in, not at this candle because that's where I got stopped out. I got in at the next candle right here. 1 minute after, actually, I got in. Yeah, it looks like I got in. Let me see. I got in at 9:37. Okay, so I got in at 9:37 p.m. So that's actually 2 minutes past my time frame. And I got after 4 minutes I got T1 at 10 ticks to the short side. Oh, and by the way, the reason I got in as soon as I got stopped out was because I had read, I knew that there was, this first trade was a counter trend, so it was going to be short-lived. Then, of course, when I got stopped out, I had been analyzing the previous candles prior to my stop out, and I saw that it was definitely not going to go back up, at least not right away. The YM doesn't do crazy stuff like that. So I figured, okay, this is likely to go short. The trend is down. These bars are definitely stronger than the bullish bars. So I measured, if it was going to go against me, I measured it up to the opening of this green candle here. So that was actually pretty good because that was only 8 ticks. And remember, I always take out my ruler. It's really fast. You just click F function 2, the function 2 key on your laptop or your computer to take out the ruler and measure your risk. It doesn't take more than 5 seconds. So when I saw that it was 8 ticks, I knew that it was a good time to go short here. And I did, and then I got my target at 10 ticks and my second target at 20 ticks after 5 minutes. Then guess what? The market reversed and it went up to 1 tick. It basically knocked me out by 1 tick above. It went 1 tick above my stop, and then it went back down. Such is life. So let's do the math. How much money did I make today? I know that's what you guys want to know. Well, on my first trade, T1 has a lower tick value than CL. It's worth $5 a tick versus $10 a tick. So I entered the market with 10 cars, and on T1 I removed 7 cars. So 7 times 50 is $350. That's what I earned on my T1 on the YM. My second target had 2 cars, and that's 2 times, and that was 20 ticks, right? So that's 20 times 2, actually that's 20 times 2 equals 400. Oh, so actually I made 200 on that. Wait, yeah, 200. Yeah, it's 200, not 100. I'm not sure why I did that. So, excuse my math. So I actually earned $1,000 today. I made a mistake on the math. In my favor. Okay. So, oh no, 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 no. No, this is originally right. I'm not sure why I made that mistake. The YM is worth $5 a tick. So on T1, yeah, basically, excuse me. Okay, on T1, it's instead of 700, that would be on the CL. I earned 350. On T2, I earned $100, and then I got stopped out for $50 on T3. On my second trade, my first target, I entered the market with 10 cars. I removed 7, so I immediately got $350 in my account. And then T2 arrived, and I immediately made I removed 2 additional cars. So that's $100, and then 1 was remaining, right? Because I had 10 cars. That one was also stopped out, and that cost me $50. So at the end of the day, by 10:05 in the morning Eastern Standard Time, I had earned $800 with using 10 cars, which is not bad. It's pretty good. So add that to what I earned on CL, and it was almost a $3,000 day. And I wanted to show you something really important here. Gabriel actually mentioned this, and I think it's important that I tell everybody. Here, do you see this micro channel? This bearish micro channel? It's got 1, 2, 3, 4, 5 little green bar, 6, 7, 8 little green bar. You know, do you see that? And this green band indicates the first 15 minutes of the trading day on YM. The YM opens at 9:30. Well, he mentioned, and I thought it was pretty insightful, that when he sees the opening of the instrument, of any instrument, breaking new lows, and what he means is this red bar is making, is breaking the low of this previous bar. This red bar is breaking, this low of this previous bar. This long red bar is breaking the low of this previous bar. So of course, this is breaking new lows. That's what that term means. And very, very few green bars trying to fight the trend, the downward trend. Well, he typically knows that in the first 15 minutes, there's usually a reversal of some kind. But he also said that when an instrument is breaking new lows, making new lows, that is highly unlikely to happen. And he's right. Look at what happened overall throughout the day. Look, it went down, then it created a bearish flag, and then boom! Look at that. It went all the way down. So it was a pretty good, insightful comment to have made. And I wanted to show you that. So whenever you see a macro channel, be cognizant that it may not reverse um, within the first 15 minutes of the market. Thanks. Uh, this is Marta, and I hope this has helped you. If you have any questions, please post them below and share this video and hit the thumbs up. Bye.